determine GDP. GDP can be determined in three ways, all of which should in principle give the same result. They are the product or output approach, the income approach, and the expenditure approach. The most direct of the three is the product approach, which sums the outputs of every class of enterprise to arrive at the total. Now, one thing important to note is gross means that GDP measures production regardless of the various uses to which that production can be put. Production can be used for immediate consumption, for investment in new fixed assets or inventories, or for replacing depreciated fixed assets. Domestic means that GDP measures production that takes place within the country's borders and the international investment is not included in GDP. Now, the gross national products, the GNP. What does gross national product mean? An economic statistic that includes GDP plus any income earned by residents from overseas investments minus income earned within the domestic economy by overseas residents. GNP is a measure of country's economic performance or what its citizens produced, that is, goods and services, and whether they produce these items within its borders. Net national product. Net national product is the total market value of the final goods and services produced by residents in a country or other polity during a given period, gross national product or GNP, minus depreciation. The net domestic product, NDP, is the equivalent application of NNP within macroeconomics, and NDP is equal to gross domestic product, that is GDP, and obviously you will minus will be depreciation. So NDP is equal to GDP minus depreciation. I repeat, NDP will be equal to GDP minus depreciation. National disposable income. National disposable income is the sum of the gross or net disposable incomes of the institutional sectors. Gross or net national disposable income equals gross or net national income at market prices minus current transfers, current taxes on income, wealth, etc., social contributions, social benefits, and other current transfers payable to non-resident units plus current transfers receivable by resident units from the rest of the world. What is private income? Private income is either any type of income received by a private individual or household derived from occupational activities, or income from an individual that is not in the form of a salary. For example, income from investments. Many people with private income of the second type are comfortably or well off and may not need a job for additional income. People in such a position can have other pursuits, for example, a philanthropist, doing something good for the society, doing for the cause of education, doing for the cause of female, doing for the cause of girl child, doing for the cause of poverty, doing for the cause of poor, and doing for the cause of nation as a whole. Then what is personal income? An individual's total gross earnings coming from wages, business enterprises, and various investments. Disposable and discretionary income. Disposable income is total personal income minus personal current taxes. In national accounts definitions, personal income minus personal current taxes equals disposable personal income. Subtracting personal outlays, which include the major category of personal or private consumption expenditure, yields personal or private savings. Now, the two facts are real GDP and nominal GDP. That means real gross domestic product and nominal gross domestic product. Nominal GDP measures the value of output during a given year using the prices prevailing during that year. Over time, the general level of prices rise due to inflation, leading to an increase in nominal GDP even if the volume of goods and services produced is unchanged. Real GDP measures the value of output in two or more different years by valuing the goods and services adjusted for inflation. For example, if both the nominal GDP and price level doubled between 1995 and 2005, the real GDP would remain the same. For year over year, GDP growth, real GDP, is usually used as it gives more accurate view of the economy. Then, what is the relation between real GDP and nominal GDP? Real GDP is calculated using constant prices, whereas nominal GDP uses current prices. The difference between the nominal GDP and real GDP is due to the inflation rate in the market. Now, the gross domestic product. It is the index of country's development. Then it has a direct link with the welfare state also. If it is not doing anything for the welfare of the country, the gross domestic product is of no use. So, a welfare state is a concept of government where the state plays the primary role in the protection and promotion of the economic and social well-being of its citizens. It is based on the principles of equality, of opportunity, equitable distribution of wealth, and public responsibility for those unable to avail themselves of the minimal provisions for a good life. The general term may cover a variety of forms of economic and social organization. The next, we move on to the numerical aspects of macroeconomics. We will be doing on how to calculate the GDPs, how to calculate the national income, all these things. So, in the first numerical illustration, we will calculate GDP on the basis of the information given below. On one hand, we see the items, and on the other hand, we see the rupees in crores. Personal consumption expenditure is 45,000 crore. Government final expenditure is rupees 5,000 crore. Gross domestic investment is rupees 5,000 crores. Increase in inventories is rupees 1,000 crores. Export of goods and services rupees 6,000 crores. Import of goods and services is rupees 7,000 crores. Net direct taxes rupees 3,500 crores. Depreciation is rupees 4,500. So, what will be the solution? How we will calculate the GDP? GDP will be 1, that is personal consumption and expenditure, added by 2, that is government final expenditure, added by 3, that is gross domestic fixed investment, added by 4, that is increase in inventories, added by 5, that is increase in that is export of goods and services. But you know that GDP does not include any foreign exchange, so it will be minused by number 6, and that is import of goods and services. So 1 plus 2 plus 3 plus 4 plus 5, but minus 5, and that will be 45,000 plus 5,000 plus 5,000 plus 1,000 plus 6,000, but minus 7,000, and the answer will be rupees 55,000 crores. You always need to know that GDP, while calculating GDP, we will not include any foreign business in it, and import is a foreign business. Now, the next numerical number 2 is find the net domestic product at market price from the following data. On one side, the items, and again on the other side, the rupees in crores. Consumption of fixed capital is rupees 50 crores. Net direct taxes, rupees 30 crores. Value of output, rupees 750 crores. Value of intermediate consumption, rupees 300 crores. Now the solution NDP at market price is 3 minus 4 minus 1, that is 750 minus 300 minus 50 equals to rupees 400 crores. Third numerical says calculate national income by income method. The method used is income method. On the one side it is items, and the other side it is rupees in crores. Compensation of applies 13,300 crores. Government final consumption expenditure 3,800 crores. Indirect taxes 3,800 crores. Gross domestic fixed capital 6,300. Mixed income of self-employed 16,100 crores. Operating surplus 5,000 crores. Net increase in stock 1,000 crores. Export of goods and services 1,700 crores. Import of goods and services 1,800 crores. Private final consumption expenditure 29,100 crores. Net Net factor income from abroad 300 crores, consumption of fixed capital 2200 crores, subsidies 300 crores. Solution: income, national income by income method is 1, that is compensation of employees, plus 6, that is operating surplus, plus 5, that is mixed income of self-employed, plus 11, that is net factor income from abroad, and that comes on to 13,300 plus 5,000 plus 16,100 plus 300 and equals to rupees 34700 crores, and that is the third numerical which has calculated national income for us. So students, after this numerical ability, we finish up with the chapter of national income and its related aggregates. We have studied the gross national product, net national product, gross and net domestic products, net disposable income, private income, personal disposable income, real and nominal GDP, and GDP and welfare state. To conclude this chapter, the only one important quote is that you need to study the scope of macroeconomics in a very, very detailed manner. When it comes to nation, it has to be vast. And when it comes to macroeconomics, it has to be more broader than micro. You have studied so many concepts in microeconomics. The only need of the time is to broaden up those concepts and come out with the actual factual details of macroeconomics. Thanks, and wishing you the very best of luck for the study of this chapter as well as the other facts of macroeconomics.